Thanks, Kathy. I would also like to thank you for coming. And I'm just going to give you a few minutes of how the insurance program works, and then we'll go to questions and answers, because as soon as I start talking, the questions will start popping into your head, and I'm going to stand up here and talk for 15 minutes when you really would like to get all those questions answered. And I don't use any PowerPoint presentations, so I'm just going to briefly tell you that we, as the federal government, do not force you to buy flood insurance. Your lender does. So if you have a mortgage on your home and it's a federally backed mortgage, then the lender will be the person requiring you to buy flood insurance. If you don't owe any money on your home, then no one will ask you to buy a flood policy. You have the opportunity before the maps change, while you're still in what we call the low risk zone, which would be the zones of B, C, or X, to purchase a policy for a maximum amount of coverage of $250,000 on your structure and $100,000 on your contents. There are two prices for that. One is $348, and that's if your house is a slab on grade. The other is $388, and that would be if your home has any type of crawl space or basement or enclosure below it. You'll have until the 19th of January to buy this insurance and get that reasonable price for the first year. There's a 30-day wait for that policy. That will take effect once you purchase the insurance, sign the application, and pay the money to your local insurance agent. The policy, if you wait until January 10th, will then become effective on February 10th. There's a 30-day wait. But you will get grandfathered into the lower risk zone. So at your next renewal, instead of having to pay what would be the applicable rate for the zone that you are currently going to be moved into, which could be $1,500 or $1,600, you will be paying around $900. I'm not standing up here thinking this is good news to you. I'm not standing up here thinking that you should just buck up and take your checks out and write it. I understand fixed income. I have an aged parent. Kathy has aged parents. We all understand what that's like. But if you don't have the flood insurance and then the lender comes to you and tells you to get it, if you've let that date of January 19th pass and it's the 20th or later, you're going to pay a much larger premium. And if you still refuse and you say, well, to the lender, I'm not going to buy it, they will buy it on your behalf, folks. It will be much more expensive, and they will add it to your note. And so when you're through paying for the house, you will still owe them for that insurance. I'm trying to just give you the most reasonable information to let you know what would be the best for you financially. You're not going to have to buy the $250,000 if you don't owe any money on your house. Your lender will control how much you have to buy. The lender has the opportunity to tell you to cover the house for the amount of the loan, the amount of replacement cost of the home, or the maximum that the federal government writes, which is $250,000. If you have a business that's located in any of these areas on the maps, and the maps are on display out there, then you can get up to $500,000 on your business for insurance. The lender is not going to require you to cover your furniture and your personal belongings if you don't want to after the first year. You can drop that. That's where the premium will be in the $900 range. That will be your choice. But it's important that you buy the policy and that you keep it in force in order to continue to get the grandfathering at the standard X zone rate, not the preferred risk rate. The main requirement for being in a preferred risk policy is that your property is physically located in the BC or the X zone. And the day the maps change, which will be at midnight on the 19th of January, you will no longer be there. You will no longer qualify for that. And it's not like, oh, I just missed it by 1 day or I missed it by 10 hours. The door is shut and there's no way to get that policy at that point. And if you don't get it, and you're not ever going to be entitled to it again until either the maps change, then you're going to be paying a much higher rate going forward. If you don't have a mortgage on the home and you're sitting there saying, well, I don't owe any money, I don't need to buy a policy, that's absolutely true. You do not. But if you purchase the insurance in advance and you keep that policy in force, the policy is transferable and it will go with the house when you sell it or leave it in an estate to someone else. So you would be preventing some future family member or maybe yourself, allowing yourself to get a better sale price for the property because they can get the lower insurance for the flood as opposed to paying the higher rate. So if you choose to not buy it because you don't owe any money, just kind of keep that in the back of your mind. Maybe you're never planning to borrow money on the property. Maybe you know, the one spouse isn't planning to die and leave the other one stranded, but those things do happen. And a reverse mortgage also requires a flood policy. Now, I know your city is working, trying to get some other options for you, and they're looking at ways to try to do some of the infrastructure repair. This is probably not, in all likelihood, going to happen prior to January 20th. If you want to wait until after the holidays to buy the flood insurance, that's certainly your right. The risk is there now, and you know that. We are expecting an El Nino this year, and when you do buy the policy, it will be 30 days before it's effective. So if you wait until December and then it starts really raining crazy, you're going to have to wait the 30 days for it to be effective. So if you'd like to keep those things in mind. Your insurance agent who writes your homeowners can write your flood policy. Flood insurance is the same, doesn't matter who you go to. The rates are set by the federal government. They can only be increased if Congress votes in a rate increase, and Congress is allowed to raise the rates 10% every year. If you're really unhappy about that, you and I elected those people, and they're the people we want to speak to about that. Well, and if we didn't elect them, then we have to take whatever whoever did elect them got for us. So keep some of those things in mind. Any insurance agent can write it. It doesn't matter if you go to an Allstate agent. It doesn't matter if you go to a State Farm agent. The rate is the same. It doesn't matter if you're in an A zone in California. It doesn't matter if you're in an A zone in Alaska or Hawaii or New Jersey. The rate is the same. An A zone is an A zone wherever it is, the same with the next zone. So the rates are the same. No insurance agent can charge you anything more than what the policy is. They're not allowed to charge any additional fees on the federal policy. If you have a very small mortgage and you think that maybe you're planning to pay it off or you just don't want to put up the $348 or $388, you can buy a lesser amount of coverage and wait until your lender does come knocking and tell you that you need to buy the flood policy. And then they will give you 45 days, at which time you can contact your insurance agent and increase the coverage. So if you just don't want to put out the $388 sometime between Christmas and the 15th or 16th of January, you can buy a smaller amount of coverage and increase it at a later time. But the lenders will come to you. It won't do you any good to call your lender tomorrow and ask them what they're going to do, because the lenders aren't aware of the map change until after it happens. So you have to be the proactive person here. They're not going to do that for you. They will get in touch with you sometime 30 to 60 days or longer, depending on who the lender is. But if your mortgage is with Wells Fargo or Citibank or Chase or Bank of America, you can look to see those letters coming within about the first 45 days of the map change. There's not a lot of other things I can tell you that you really want to hear. It would be better if you ask your questions and we answer them for the good of the order. And I believe that they have a procedure they want to follow, so I will let Ken put that back in order.